President Obama meeting with community bankers. Let's listen in.
Good to see all of you. I just completed a meeting with 12 regional community banks to have the same conversation that I had with some of the larger banks last week and that I've been having with CEOs and companies across the country over the last year. And that is, how do we continue to consolidate the gains we've made during the course of this year in terms of economic recovery, but most importantly, how do we move forward over the next year so that businesses are getting the capital that they need and that we are starting to see people hired again, people able to finance their homes, finance college educations, and so forth. Community banks serve a vital function all across the country. They are folks who know their customers, don't just lend them money, but also provide them advice if they're entrepreneurs and getting started. They are intimately woven into the fabric of the community. I think it's fair to say that most of these community banks were not engaged in some of the hugely risky activities that helped to precipitate the financial crisis. At the same time, they continue to try to do their best in their local and regional markets to make sure that businesses who are now being affected by the overall recession are able to pick themselves back up. What I did was to go around the room and to hear from each of them. Not all these communities are the same. We've got everything from Kalamazoo to Harlem to small communities in Arkansas that focus mostly on farm loans. There were some general themes that were out there. One, that there are businesses that are looking for loans out there that are profitable and ready to make money. And the key is to match them up with banks that are in a position to lend. There are some banks that have seen the increase in the savings rate and higher deposits give them a pretty good capital base, but they're still constrained by some regulatory restraints. We are looking to see if there are possibilities to cut some of the red tape. We don't have direct influence over our independent regulators, but we think that the more that we can highlight that in some ways the pendulum may have swung too far in the direction of not lending after a decade in which it had gone way too far in the direction of getting money out the door no matter the risk, that if we can get that balance right, that there are businesses and communities out there that are ready to grow again, and we just need to help make that happen. I also had a discussion with all these bankers about the prospects for financial regulatory reform. As I said, many of the issues when it comes to large systemic banks and what precipitated the crisis on Wall Street don't apply to these smaller banks. Most of them are very supportive of the idea of financial regulatory reform. I think fairly, they just want to make sure that as we regulate better, that doesn't automatically mean that we're just loading them up with more paperwork and more burdens. And I think we do have an obligation to make sure that the regulatory schemes that we come up with are more streamlined and more efficient and are sending clear signals to the banks involved. I did emphasize to them that community banks do have a responsibility to their customers, and that many of the consumer protections and efforts to make to create a single consumer financial protection agency would apply to them. And we think that's important because every bank, large and small, is providing credit cards and providing debit cards and providing mortgage loans. And we think that the more we are making sure the banks aren't competing by how obscure their fine print is, but rather competing on the basis of the quality of their service and the terms of their loans, the better off consumers are going to be, and ultimately the better off banks are going to be as well. So I very much appreciate them all coming in. I think the main message that I want everybody to take away, and certainly this is the message that I took away from the conversations here, is that there remains enormous opportunities as we come out of this recession for businesses to start growing again and to start hiring again. And everything that we're going to be doing here in the White House over the next several months is going to be geared towards catalyzing and spurring additional lending, particularly to small businesses, because we feel very optimistic that the worst is behind us and that now is the time for us to seize opportunities. With that, I want to wish everybody, if I don't see you guys before Christmas, a happy Christmas and Merry Christmas and a Happy New Year. All right? Thank you, guys.
Thank you very much.
President Obama meeting with community bankers today, and some of the highlights, I think, from what he was saying to the press that was gathered there, that they acknowledge maybe a little too much red tape when it comes to lending. Maybe that's one of the reasons, but saying also the community banks, he believes, should be subject to the Consumer Protection Agency, that it will apply to them, and that he feels very optimistic that the worst is behind us when it comes to the economy.
There was a moment of sort of self-reflection there that he said the pendulum may have swung too far in terms of regulatory restrictions that result in too little lending, and that felt to me like a little bit of a backing away from some of the toughest rhetoric that he has had. Though I got to say, I mean, if you're gonna buy into the idea that you have a consumer protection agency that is supposed to protect against abuses in credit cards and lending and so forth, why shouldn't it apply to community banks? I don't get why it shouldn't. Because, by the way, more of the community banks are the ones that have actually failed than the national banks.
His message coming out of this meeting was much kinder and much more conciliatory than his message coming out of the meeting with the fat cats at the big guys at the big banks. But he still is asking these banks to serve two masters. We want you to worry about new regulation on consumer financial protection. The FDIC wants to raise more money for capital reserves funds. You've got to raise your capital reserve requirements, and yet you're supposed to loan money into an economy that now we thought was growing in the third quarter at 3.5%. Now it's growing only 2.2% in the third quarter. And I just wonder how hard it is for banks to do both of those things at the same time.
We should also let folks know, he said right at the very end that he's going to delay going to Hawaii until the Senate finishes up on health care. So once again, pushing the health care reform. And let's see if that leads to even more deals coming out of the Senate.
I don't know why it has to pass in the dark of night, right before Christmas. We've got time. We can take our time. Go ahead and go to Hawaii, Mr. President.